We are active investors.
Yes.
I don't think indices are going to deliver the diversification that investors want. And active investors can find those opportunities all across emerging markets to give you a good outcome.
Good morning, viewers, and welcome to episode 2 of Unscripted in conversation with Eastspring, where we bring you meaningful bite-sized takeaways for everything macro, markets, and investing related. Last week, in episode 1, I spoke with Ray Faris, our chief economist. Today, who better than Vis Nayar, our chief investment officer, overseeing all of Eastspring's investment strategies. Vis, great to have you.
Good morning, Salman.
Good morning. Vis talked about U.S. exceptionalism with Ray last week. Bring that closer to home. How are you advising investors to think about investing and portfolios in the midst of the challenges the U.S. is facing?
So look, our core view, which Ray would have presented, would be that we think US growth is likely to be more subdued in the second half of the year. So as investors, a lot of investors have been looking solely at the US for the last couple of years, and they're looking further afield. The key thing is there's been a lot of volatility in the markets, and the key thing is to think about diversification, to think about growth elsewhere in the world, and really people are starting to think further afield, as you just said. So further afield, look, we're looking for countries that have strong domestic consumption, countries that have interesting abilities to pivot on policy. So for example, India has quite low levels of trade with the US, and of course we've seen some interest rate cuts there already. So really an interesting place to think about investing. China has been such a sort of lack of institutional investment, especially from the US. But what we see there is we've seen 2% GDP, sort of a fiscal boost worth about 2% of GDP. We're expecting to see a little bit more from China, and then that makes it an interesting place to be in that sort of policy dimension. Then we have Japan, and of course Japan has had a series of difficult years. But what we've seen is a lot of corporate governance issues, and there's a new narrative around corporate Japan also working a lot harder around dealing with that. So I think that there are some interesting parts of the world for investors to diversify to navigate a world where growth is much more sort of focused away from US into Asia, and actually diversifying their portfolios.
That's fantastic. Thank you, Vis. Really appreciate it. As someone who oversees our circa 260 billion of assets across institutional money we run, retail money we run, how are you thinking about, or how are you positioning portfolios at Eastspring at the moment?
So key thing to think about now, we've got a very clear focus on diversification. So portfolios themselves are going to be a little bit more long duration. Duration really we need to add tactically, because we've seen a lot of volatility at the long end. Now, in terms of equities, we've seen leadership from growth strategies for a number of years. But what we find is that in 2025, it's value, income, it's other types of stocks that are doing well. So in the equity space, much more about diversification in different types of strategies.
Fantastic, thank you, Viz. And you've talked about a couple of strategies. Overall, how do you think which strategies do you think are standing out a bit more? I mean, we've talked a bit offline about low volatility. We're talking about that to retail investors. Do you want to call out any specific strategies that stand out more on a conviction basis for you?
Well, of course, you took the words out of my mouth. So in these times, we've seen a lot of volatility, and low volatility strategies are almost naturally designed for those. Eastspring has had a long heritage of delivering those for clients, and I think that's really getting a lot of interest. Then when we think about more diversified strategies, income, for example, continues to do well. It's very interesting when we think, in terms of country exposure of things like income. A lot of opportunities in China, for example, very steady, low beta, very steady stocks. And then value has outperformed this year. Really, I think it's just a change in leadership. We've had US growth stocks dominating markets, and I think that domination seems to be a little bit more challenged, and I think that we expect to see a little bit more interest in EM and pockets of EM. I want to just emphasize, we are active investors. I don't think indices are going to deliver the diversification that investors want. And active investors can find those opportunities all across emerging markets to give you a good outcome.
That's fantastic. It's a really, really good narrative. Diversify, active investing, Asia, EM. Let's get to the punchline. I know you've been on the road last couple of weeks speaking to a lot of clients. what's the punchline takeaway for viewers from your dialogue with clients?
Well, the key thing, it's somewhat cheesy if I say the only certainty seems to be uncertainty.
Yep.
As we all look at the news every single night in terms of the new comments and feedback from the US president. But really, in that narrative, we still continue to be interested in those strategies I just described. Diversifying away from the US, looking for growth elsewhere, thinking about more interesting allocations like low volatility, like income, like value, something a little bit more than just growth. And really in terms of fixed income, thinking about duration. There's been such a lot of volatility, you need to be tactical about buying duration, but that is a really interesting trade in the near future.
Fantastic. Viz, a great conversation. Hope to see you again on the episodes as well. Thanks for joining us. Appreciate it.